A very good morning from Khandwala Securities Limited and welcome to Tuesday's trading action at Dalal Street dated March 22nd, 2022. Well, international tensions are becoming increasingly volatile and honestly speaking, it's getting difficult to predict how the next major crisis will look like or if there will even be one anytime soon. But we do know nations will be doing everything in their power to maintain and strengthen their geopolitical power day in and day out. Overnight, WTI oil prices have jumped to $111 per barrel after European Union considered ban on Russian imports. Meanwhile, the Ukraine conflict showed little signs of easing with Ukraine. Federal Reserve Chairman Jerome Powell was also seen stating that inflation is too much high. The Fed chief has further stated that upside price pressures stemming from Russia's invasion of Ukraine come when inflation was already running too high. On the contrary, Reserve Bank of India Governor Shaktikanta Das has said there is no On the contrary, Reserve Bank of India Governor Shaktikanta Das has said that there is no prospect of the economy falling into stagflation vortex and retail inflation is expected to moderate going forward, notwithstanding fears of imported inflation given the massive spike in commodity prices, especially after Russia invaded Ukraine last month. That brings us to our call of the day, which suggests the benchmarks to consolidate in today's trade. Nifty may most probably waver. Now, here are other key things and themes we need to know before market opens. Nifty bulls are likely to struggle for traction on the buy side. Also, denting sentiments are the 10-year US Treasury bond yields, which hit a 33-month high at 2.25%. In yesterday's trade, FIs sold shares worth Rs 2,962 crores. DIs, however, bought shares worth Rs 253 crores. The Nifty options data for March series suggests Nifty is likely to be in a trading range of 16,500 to 17,500 zone. Maximum call open interest at 18,000 followed by 17,500 strike price. So the 18,000 mark will be Nifty's crucial resistance zone. Maximum put open interest stand at 16,000 levels followed by 17,000 levels. Call writing was seen at 17,200 and then at 17,500 strike price, while there was meaningful put writing at 17,200 and then at 17,100 strike price. India VIX, which measures the expected volatility in the market, flared up 8.9% in yesterday's trade. We suspect volatility is likely to remain elevated in the coming week given the Russia-Ukraine tensions. Volatility has to fall below the 20 mark for stability and to bring the bulls back on street. Technically speaking, Nifty's biggest supports are placed at 16,959 to 16,691 zone. Only below Nifty 16,691 expect waterfall of selling, which could take Nifty down to 15,921 mark with inter-month perspective. From a chartist standpoint, the technical landscape will improve considerably only if Nifty closes above its biggest hurdles at 17,807 mark. Our chart of the day is bullish on Vedanta, National Aluminium, Reliance Industries, SRF, Trent and ONGC with an inter-month perspective. That's all we have for now. For any queries, do contact us at 022 4076 7373 and do visit our website www.kslindia.com. Thank you and have a profitable day. Please note that the stocks mentioned in this podcast are only for educational purpose. Our company or any of its employees shall not be held responsible for any investment or trading action undertaken by any person based on the stocks mentioned in this podcast.